gold breaks through $2,700, with tariff policy uncertainty giving bulls a major boost. Can prices retest all-time highs in the near future? What key factors are in play, and which kind of risk events could shake things up? Catch all the details in this episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has really been showing strength, breaking back above $2,700. The market's uncertainty around Trump's tariff plans and the growing debt problems in the US have brought gold closer to its all-time highs. At the same time, the Fed's slower pace of rate cuts is a key obstacle for further price gains. In the short term, traders will be watching closely for any updates from the White House and market-moving developments from the Bank of Japan's rate decisions this Friday. In today's video, I'll quickly go over gold's recent moves, highlight some key price levels to keep an eye on, and talk a bit about some risks that could shake things up. Let's dive in. Looking at the gold against US dollar daily chart, gold's uptrend since the holiday season is still going strong. Bulls have driven prices to break above late last year's high of $2,720 and the upper boundary of the rising wedge from mid of November, making $2,700 the new support level. Right now, prices are testing the top of the rising channel, and if they break through, we could see gold pushing towards its all-time high of $2,790. Well, if the bears step in, $2,720 and $2,660 could provide some support on the downside. Well, I feel like the big factor behind gold's recent jump is really Trump's vague statements on tariffs. He mentioned the possibility of a 25% tariff on Canada and Mexico starting February the 1st and duties on the European Union, but he didn't really give any specifics on how it would be carried out. His unclear stance on the much-discussed 10 to 20% across-the-board tariffs and additional taxes on China has raised a lot of uncertainty in the market. With potential trade tensions and negotiations ahead, risk-off sentiment has increased, and that's been good for gold, obviously. Spider Gold Trust, the world's largest gold ETF, saw a big jump in holdings, adding 10.34 tons on January 20, which supported gold's price. At the same time, the US debt and deficit issues can't really be ignored. According to the Congressional Budget Office, the US will face a $1.87 trillion deficit in 2025, which is about 6.2% of GDP. And by 2035, nearly 90% of fiscal spending will be mandatory. With interest on US debt already surpassing their defense spending, there are growing concerns about a potential debt crisis, which is boosting demand for gold as a safe haven asset. Well, that said, the Fed's slower pace of rate cuts is still a big challenge for gold. Strong US labor data, stubborn inflation, and potential policy moves from Trump suggest that inflation's decline may not be as smooth as we expected. Markets are pricing in the next rate cuts for October, and the strong dollar, driven by interest rate differentials, could put pressure on gold in the short term. But if the Fed doesn't really hike rates again, a rebound in US inflation could push real interest rate lower, which could be bullish for gold in the medium to long term. Geopolitical risks also have a mixed impact on gold. Tensions in the Middle East and the Russia-Ukraine conflict are keeping safe haven demand strong for gold. But if Trump follows through on any, diplomatic breakthroughs, those bullish factors could turn negative for gold. So overall, gold has broken through some key resistance levels in the past week, with bulls in control. The uncertainty around Trump's tariffs and the US debt situation has driven gold higher, while concerns about the fiscal deficit are also playing a role. I think gold will likely keep moving up in the short term. And for the rest of this week, with no Tier 1 US economic data, gold will continue to be highly influenced by market sentiment, especially Trump's tariff comments. As more details on policy emerge, the market will get a clearer view of how these factors will affect the US economy and global trade. This uncertainty and market volatility could keep supporting gold. On top of that, markets are almost fully pricing in a 25 basis point rate hike from the Bank of Japan this Friday, which could trigger renewed unwinding of yen carry trade. Potential capital flows into low-risk assets like gold, coupled with a weaker dollar driven by narrowing yield spreads, might provide short-term support for gold prices. But with no clear timeline for the next rate moves from the US and Japan, the effect might be quite short-lived from my personal perspective. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!